Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for a bigger three-wave structure to the downside, after which we expect continuation to the upside. Wave A here is a contracting leading diagonal where wave 5 closed some daily candles inside the weekly gap, which does increase these probabilities slightly for price to move down to the other end of the gap sooner or later, which is a possibility with this wave C. As then in wave B, we're looking for a zigzag structure to the upside, which is also most common in a wave B, where then the target area is between the 382 and the 886, taken from the high to the low of A, giving you a target area between 63.1k and 71.9k. This wave B preferably also finishes after the 0.382 Fib time, taken from the start to the end of A, comparing A in time with B in time, sitting on the 19th of May. This scenario is also most interesting from a psychology point of view, because after the low was made over here and price moved impulsively towards the upside, the sentiment got quite bullish. But what we're going to do in this scenario is create a triple top here. We have high number 1, high number 2, and then create another lower high number 3. And you can imagine if we move impulsively to the upside here in a local wave C, ABC, which is a 5-wave impulsive structure, preferably on a high amount of volume, people are going to be greedy, FOMO, they're going to be looking for all-time highs. However, in this case, we then look for resistance and price to move towards the downside, stopping all these people out, also the early longers over here, stopping them out and preferably moving down in wave C on a high amount of volume, creating some fear and panic, which we then use for price to move back towards the upside. The most bullish scenario is simply that the low is in, and this is a wave 1 looking for 2 and then a wave 3 towards the upside, where you're going to be aiming for all-time highs. On the 4-hour chart, your bullish scenario here that is not yet finished is a wave 1 or A, then an unfinished B or 2, and looking for price to move towards the upside in a wave C or a wave 3. Common target area for your wave 2 is the golden pocket to the 786, taken from the low to the high of wave 1, giving you a target area between 59.9k and 58.4k. The 886 is also still a common target for a wave B, and we do have some additional support in this area. We have the first blue box here, 59.4, 60k, and then the second one, 57.9k to 58.3k. The invalidation for this scenario is price moving down to take this low at 56.5k. Now locally inside this wave B or 2, we are then looking for a 3-wave corrective structure to the downside, in this case in an unfinished WXY, where we have a wave WABC to the downside, then we have a zigzag to the upside in a wave X, preferably finished, looking for a zigzag to the downside in a wave Y. The moment the 0.7 is hit at 63.9k, taken from the high to the low of W, the probabilities for this scenario will significantly reduce. Now in wave Y, we are then looking for a zigzag to the downside in a 535. Common target area is the 0.618 to the 1.236 trend-based fib extension, taken from the high to the low of W to the current high that we have, giving you a target area between 60.1k and 56.1k. And you can see that the 618 is in confluence with the upper blue support box, and the 1-to-1 here is in confluence with the lower blue support box, which is good to see. The most bullish scenario is that you have a finished impulse to the upside in a wave 1 or A, finished 3-wave corrective structure in a 2 or B, and we're looking for continuation to the upside in a wave C or a wave 3, which means that in this section over here we need to count one of 3 bullish structures: an impulse, a diagonal, or a double 1-2. Now for an impulse, we can count a diagonal in a wave 1, 3-wave correction in a wave 2, then a 5-wave impulsive structure in a wave 3, but then wave 4 now retraced to the 0.618. That is an invalidation for wave 4, significantly reducing the probabilities for an impulse. In a diagonal structure, we're then looking for a wave 1, 2, 3, 4, 5. This is a leading diagonal, 5 waves in a wave 1, zigzag in 2, 5 waves in 3, zigzag in 4, and then you want to see a wave 5 towards the upside. Now this diagonal already became an expanding diagonal, which is very, very rare, never preferred unless all of the other stuff fails. This then leads us to the double 1-2, where we have a wave 1 finished, 2 finished, a second wave 1, a second wave 2, and we look for continuation to the upside in a very big wave 3. It is not invalidated because the invalidation for that scenario is the low here at 60.7k. However, this second wave 1 to the upside is longer in price than the first wave 1 over here. If you take a trend-based wave extension from the low to the high to the low, which does reduce the probabilities slightly, but from these three options, it at the moment has the highest probability. If we go back to the daily time frame, then the bearish scenario is a sideways three-wave corrective structure, after which we expect continuation to the upside. But in this scenario, we're not going to take the 65k high, we're actually going to move down to the 56k low immediately, where we're looking for a wave Y in an A, B, and then a wave C. Common target area for your wave Y is the 0.618 to the 1.236 trend-based fib extension from the high to the low of W to the high of wave X, giving you a target area between 56.7k and 47.8k. The extension target is the 1.618 at 42.4k. What lowers the probabilities for this scenario is this wave X, because X is a running flat structure, which is very rare, never preferred unless all of the other stuff fails, because wave C did not go below this wave A. On the lower time frames, we're then looking for that A, B, C or impulsive structure to the downside in a 1, 2, 3, where your wave A or 1 finished here, after which we have a W, X, Y in wave 2 or B, and this is then a flat structure in W. Then we have a flat in X and a zigzag in a wave Y. Because wave Y here is an ABC zigzag in this scenario, wave W cannot be a zigzag and therefore has to be a flat structure. But that does lead us to a little bit of a problem, because now the low of A or 1 has to be this low over here for your ABC to the upside in wave W. But if we then look at this wave A or 1 in more detail, then yeah, we can count a wave 1, a 2, a 3, a 4 over here. But our wave 5 preferably is a wave 1, 2, 3, 4, 5 wave structure. So preferably we're finishing wave 1 or A at this particular low and not at this low. But we can't do that in this scenario because wave W has to be a flat, because wave Y is already a zigzag structure. So it does lower the probabilities for this bearish scenario compared to the bullish scenarios that we have. Now with regards to the CVD divergences, we had a bit of bearish CVD divergences at the high here, and with the current drop here to the downside, we also have bullish CVD divergences on yellow, as you can see, higher low on price, but look at yellow, lower low on the CVD here. So a little bit of bullish CVD divergences, but with this volume move to the downside, it would be good to look for more local proof of support as well, because we of course have the scenarios where price could continue down, and look for support at the lower areas. There is some news today. We have news over here at 2:30 p.m. Central European time and also 4 p.m. So it might be volatile. Make sure you trade safe around these hours. So if we then go to the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bullish scenario, either an A, B, C to the upside to finish the green B and then move down in C, or a wave 1, 2, and 3 to the upside, with on the number 2 spot here the bearish scenario, which has a running flat, which makes it a lower probability scenario, ABC, moving towards the downside below the lows here. On the 4-hour time frame, looking at this section of the chart in particular, currently the highest probability scenario is the bullish scenarios, in particular a potential unfinished WXY here, looking for support at 60k and 58k. And if price then moves towards the downside, we need to see some proof of support in this area because of the potential, at least, of continuation to the downside. On the number 2 spot, we then have that bearish scenario over here, where we have continuation down, but also the bullish scenario where this is your low and we're looking for continuation to the upside, because an impulse here doesn't really work. A diagonal is expanded, which is very rare and never preferred, which then leaves us the double 1-2, but your second wave 1 is longer than your first wave 1. So the probabilities are not yet on the side for that to happen, even though we do have the bullish CVD divergences. We just keep an eye on what price does does here, and also continue to keep in mind the probabilities of the different scenarios. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.